Okay, this is Brian Stoll for Timing Strategies, Monday, December the 17th. How many more shopping days for Christmas? Who knows? How many more shopping days if you want to buy the stock market? That's what we're about here for now. Let me go into it right away here. Instead of recapping the same old news that everybody recaps, yeah, market was down. Why? Doesn't matter. It's down. What I want to bring to your attention is what we have right now, and this is pictures in the clouds, technical analysis, whatever kind of charting, visualizations, ink blot test you want to use to call it. We have, in my opinion, a right shoulder here and a right shoulder that we had over here from ahead, obviously, and this is all perfect hindsight from here. But what the interesting point about what I'm raking in here is not that we've got a potential head shoulder with a double right shoulder on a lower right shoulder, but on the lower right shoulder, what we have here is a high put in on a retest of the previous high, and we have a gap from that low to that low, which is really, it's not a gap island top, but if you take the day from December the 5th until yesterday's closing price of December the 14th, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 bars, about 2 weeks worth of price data that was basically in an island. It's not a gap island top, but there is a essence right now of a gap from here to the gap that we had from here. And now there's some fresh air. And if this market keeps accelerating lower, and obviously we've got the gap that we're looking at right now for our target, and everybody else is seeing that too, so we might not get it. But if we wash out these lows that we have in here on the spiders as of November the 26th, forget it, baby. All bets are off. I mean, we're already, by definition, in my opinion, the early stage of the bear market. It's not too late to jump on board and go with momentum. But if we come back down to this level here, before we get this is here is the default. If we come back down to this level, close this gap over the next several days, tomorrow, Monday, Tuesday, Wednesday, before we take out and go back up and retest the highs of those gaps. See, that gap is key. That gap right there from Friday's close to today's high is extremely important. If we go back up before we come back down, I'm going to use that to add to our short position right now, of which we are currently 40% short from the highs of, well, Monday, December 10th. So again, strategy, if we go back up and retest that high of today and don't close that gap, I will more than likely add at least another 25% to our short position, which will bring it up to 65%. We may go 80%. It's all a matter of price action, volume, some other things. If we get a move that, again, takes us down first, not that, down first, and then to those lows or washes out those lows, what we'll look to do is potentially cover our shorts on an end of year, stupid pet trick rally that might take us back up to this level somewhere around there. But that all remains to be seen. What I want to bring in at this point is the emerging markets. Woo-wee, baby! Like I was saying, check out some of our other videos right around this time. If you're long any international funds, emerging markets especially, hey, the keg's dry, in my opinion. Don't keep trying to pull beer out of something that didn't have any in there. And besides, it sounds like the cops are coming. This market really took it on the chin today, and that really demonstrates that potential gap island. If you want to get short here something, which we already have in limited quantity, certainly you never have enough of your winners. You always have too much of your losers. But your EEV, which is what we own right now, and I wish we had more, but from its lows, obviously, hindsight perfect 2020, that's up 26%, my friend, in 1, 2, 3, 4, 5 days. Another way to look at it, if you want to look at the FXI, which is the Chinese, let me get rid of some of this garbage here. These are things that just kind of hang around. FXI, the Chinese ETF, hugely liquid now, again leaving a massive gap right below that top on that potential, again, breakdown. If you want to get short that, beautiful, beautiful ETF. FXP. It's 2 beta from its lows. Again, hindsight, beautiful 2020. But that ETF is up 40%. Will we look to buy that on any kind of pullback? Absolutely. Timing is critical on this one, though. I mean, good location, and we'll go into that a little bit later. Or if you want to give us a call or an email, we'll send you how we see then where we put our position on if we wanted to get long that. But again, up 40% in the last 2 weeks for that ETF. That just, it doesn't get any better than that, and it's pretty liquid. You know, it's not just, you know, one of those things that trade a couple 100,000 or 50,000 shares a day. It's about up to 1 million shares a day. So you know the big boys are using this right out of the gate. Another point I want to bring in here is the XLB. This is the materials ETF. Massive breakdown. If you want to get short the XLB, you can short it straight using a straight margin account, or if you're real interested, SMN. Sweet. I mean, and this is not too late to get started. I mean, if we get a come back down on this XLB, let me kind of go back for you. XLB, if we get a bounce, it takes us back up into that range right around the 141, the 41.5, 41.75 level. Nothing that closes above here do I want to be long. So if we close back above this level, I don't want to be long. But if we come back up and test this level, anywhere to the 41 to the 41.5 level, anywhere back up into this range tomorrow, absolutely, I want to be, because this is a very low risk trade, getting long the SMN, which would equate on a price basis somewhere, you know, right back to the lows of Friday, or the highs of Friday, about 41. And that will really, I think, show a real neat return going into 2008. Beyond that, you know, we got the Santa Claus rally everybody's looking for. Is that going to happen? Well, maybe, but again, the darlings of the market, you know, the EFA, Europe, Far East, and Australia, massive selling in the last 3 days. That just doesn't, you know, look like a happy meal coming. So again, that could take us down. Another point, if you're thinking about gold, if you're a gold bug, which I'm a closet gold bug, so to speak, myself, but I accept the reality about how the Fed and the central banking system works against gold. The GDX really took it again today. That smells of inflation, even though the dollar did not move up as high as it did, and bonds kind of got bought up a little bit today. Flight to quality, who knows if it's really quality. It's a flight to something. But the GDX is signaling, hey, gold is not right now in favor. If you want to look at the GLD instead, you know, yeah, we haven't gotten a breakdown yet that I keep looking for. It just kind of keeps holding on with the metal versus the paper, but I am still looking for that to break down. And when that breaks down, you know, you're either in it or you're out. And if you're in it, you're going to be wishing you were out. And so we're just going to keep an eye on this real closely for the time being. And we have another article posted up on our website. Go to our archives page, and you can see our article archives, kind of what we put on as far as the XLF, one of the strategies that we're implementing. And, you know, give us a call, 1-800-675-2131, or give us an email if you have any questions. Until then, like I said, going back to the spiders, based on what we get for price action tomorrow over the next couple of days, if we get a wash down to this level, we're going to probably cover our positions and go flat, depending on what it does. If we add to our short position is based on what it does tomorrow. But again, Santa Claus is still there, and he can show up at any time. So until tomorrow, Merry Christmas, Happy Hanukkah, and to all a good night.